Hey everyone, and welcome back to Finance Discovery. Ever stared at an empty wallet, wondering how you'll ever get ahead financially? What if I told you you don't need to be rich to start building real wealth? You know, the kind of wealth that changes your life? Forget those massive down payments and intimidating figures. All you really need to kick things off is just $100, yes, $100, and perhaps even more importantly, the right mindset. That's it. Imagine transforming that small sum into something truly significant. We're going to show you exactly how to do it. Get ready to start small and think big, because today, we're demystifying investing and making it accessible for everyone. All right, let's dive into step 1, setting your goal. Before you even think about where your money is going, you need to understand why it's going there. Seriously, this is the most crucial part. What are you hoping to achieve? Is it saving up for that dream car you've always wanted? Maybe you're looking to start your own business someday, or perhaps the ultimate goal is achieving true financial freedom, living life on your own terms. These long-term aspirations are more than just wishes. They give your money a real purpose, a direction. Think of it like this. Without a clear destination, investing is just guessing, throwing darts in the dark, hoping something sticks. But with a solid goal, every dollar you invest is a step forward, bringing you closer to your dreams. So, grab a pen and paper or open up your Notes app and really define what you want your money to do for you. Make it exciting, make it tangible, and make it yours. This goal will be your North Star, guiding every investment decision you make. It's the fuel that keeps you going when the market gets a little bumpy, and it's the celebration waiting for you at the end of your journey. So what's your goal? Let us know in the comments below. Now for step 2, choosing your platform. Okay, you know your why. Great. The next logical step is to pick the right vehicle to get you there. And in today's digital age, that means finding a beginner-friendly investing app. The market is flooded with options, which can feel overwhelming. But don't worry, I'll simplify it for you. When you're just starting out, there are a few key features you absolutely want to look for. First, and this is a big one, choose an app with no commission fees. Seriously, every penny counts, especially when you're starting small. You don't want your hard-earned money being eaten up by transaction costs. Second, look for apps that offer fractional shares. This is a game changer. Fractional shares mean you can invest in a company's stock, like Apple or Tesla, even if you can't afford a full share. You can buy just a fraction of it, meaning you can literally invest for as little as $1 at a time. This lowers the barrier to entry significantly and allows you to diversify your tiny portfolio without needing a huge chunk of cash up front. Apps like Robinhood, Webull, eToro, and Tiger Brokers, depending on your region, are popular choices that often fit this bill. Do a little research, read some reviews, and pick one that feels intuitive and secure for you. It's like choosing the right tool for the job. The easier it is to use, the more likely you are to stick with it. All right, we're moving swiftly to step 3, learning the basics. Before you put any money down, it's absolutely essential to understand what you're actually buying. Think of it like learning the rules of a game before you start playing. You wouldn't jump into a complex board game without reading the instructions, right? The same goes for investing. So, let's simplify the 2 most common entry points: stocks and ETFs. A stock in its simplest form represents ownership in a company. When you buy a stock, you're buying a tiny piece of that business. If the company does well, your stock value tends to go up. If it struggles, it might go down. It's exciting, but it can also be a bit more volatile, especially when you're just starting. Then there are ETFs, or exchange-traded funds. Think of an ETF as a basket of many stocks, or even other assets, all bundled together. Instead of buying individual stocks, you buy one share of an ETF, and suddenly you own a tiny slice of, say, 500 different companies, like in an S&P 500 ETF. This diversification makes ETFs generally safer and more stable for beginners because you're not putting all your eggs in one basket. If one company struggles, the other 499 might be doing just fine, balancing things out. So while stocks can offer higher individual returns, ETFs often provide a smoother ride with less risk for newcomers. Do a quick search on what is a stock and what is an ETF. A little knowledge goes a long way here. Now for step 4. The moment you've been waiting for, start investing. You've set your goal, picked your platform, and learned the basics. It's time to take action. But here's the secret sauce. The key isn't how much you invest initially, it's how consistently you invest. Don't feel pressured to dump all your $100 at once. Start small, really small. Even $10 a week or $20 every 2 weeks or whatever you can comfortably afford is powerful. Imagine putting $10 into a company like Tesla one week, $20 into an S&P 500 ETF the next, and another $10 into Apple the week after that. These small, regular contributions might not seem like much on their own, but they build up over time. This consistent habit is what allows the magic of compounding to start working for you. Compounding, often called the eighth wonder of the world, means your earnings start earning their own earnings. It's like a snowball rolling down a hill, gathering more snow and getting bigger and faster. The earlier you start and the more consistently you contribute, the more time that snowball has to grow. So set up an automatic transfer if you can, even if it's just a tiny amount. Make investing a regular habit, like brushing your teeth, and watch your future self thank you. Consistency, not size, is your superpower here. All right, let's talk about step 5. Don't panic. This is where many new investors falter, so listen closely. The stock market is like a roller coaster. It goes up and it goes down. It always has, and it always will. You'll see headlines screaming about market crashes, dips, and corrections. It's inevitable. And when prices fall, your natural instinct might be to panic, to sell everything, and cut your losses. Resist that urge. Real investors understand that these fluctuations are a normal part of the game. They don't react impulsively to every dip. Instead, they think long-term. Look at the historical charts. Over extended periods, the market has always recovered and gone on to reach new highs. Those short-term drops often present fantastic opportunities to buy more assets at a lower price, which can boost your returns when the market inevitably recovers. It's called buying the dip. So when things get shaky, take a deep breath, remember your long-term goals, and stay calm. Your patience and discipline during these times will be richly rewarded. Don't let emotion hijack your investment strategy. Trust the process, trust in consistent investing, and trust in the power of the long game. And there you have it. You started with just $100, which might have felt like a tiny drop in the ocean. But with time, consistent discipline, and the patience to weather market ups and downs, that initial $100 can absolutely blossom into $10,000, $50,000, or even more. It's not about getting rich quick. It's about getting rich smart and steadily. Financial freedom isn't reserved for a select few. It's built brick by brick, dollar by dollar, by people just like you who decide to take control of their financial future. Every small step you take today is a giant leap for your tomorrow. So what are you waiting for? Start your journey today. Thank you so much for watching, and remember, your financial future is in your hands. If you found this video helpful, please give it a big thumbs up, share it with someone who needs to hear this message, and don't forget to subscribe to Finance Discovery. Hit that notification bell so you never miss out on decoding, learning, and growing your wealth with us. Until next time, happy investing.